Here's something nobody wants to admit. Most people will never be rich, and it has almost nothing to do with their salary. It's because they never started investing. Right now, while you're watching this, there's someone younger than you starting their first investment. And in 20 years, they'll have more money than you will, even if you earn twice as much. The gap? Compound growth. It's the closest thing to a money cheat code that actually exists. So what actually is a stock? A stock is literally just a tiny piece of ownership in a company. When you buy Apple stock, you're buying a fractional slice of Apple itself. Companies sell stocks to raise money for growth, and you benefit when the company makes more profit. Your piece becomes more valuable. It's that simple. You're not gambling. You're becoming a part owner of businesses that generate real revenue. Now, let's talk about compound growth, and I want you to actually listen to this number. If you invest just $100 per month, starting at age 20 with a realistic 8% annual return, by age 50 you'll have over $20,000. That's from investing just up to $6,000 of your own money. But here's where it gets painful. If you wait until you're 30 to start that same $100 month, by 50 you'll only have around $120,000. Starting 10 years later costs you $170,000. That's the real cost of waiting. So how do you actually start? First, open a brokerage account. That's just a platform where you can buy stocks. Apps like your local bank's investment platform or specific stockbrokers make this take about 15 minutes online. Second, start small. $50, $100 per month, whatever fits your budget. Third, buy index funds or ETFs for beginners, not individual stocks. An index fund is basically a pre-made basket of 500 companies, so you're diversified immediately. This is how you build passive income ideas that actually work. The biggest beginner mistake I see is thinking you need a huge amount of money to start. You don't. The second mistake is selling when the market drops. The stock market will crash. It always does. But it always recovers. And if you keep investing during the crash, you're buying at lower prices. That's how wealth is actually built. Boring consistency, not panic selling. Here's what separates people who build wealth from people who don't. They started early with investing tips that actually work. They understood that time in the market beats timing the market. They didn't wait for the perfect moment or the perfect amount of money. They just started. And honestly, knowing this is 80% of the battle. Most people never even get here. Your job right now is simple. Open an account this week. Invest something. Even if it's just 20, get started with compound growth working for you instead of against you. The best time to plant a tree was 20 years ago. The second best time is today. That's your stock market basics foundation. Build on it. If this video helped you understand how to invest in share market better, smash that like button, subscribe for more personal finance advice, and drop a comment telling me, when are you making your first investment? Let's build wealth together. See you in the next one.